Hey, good afternoon, folks. Chris here with LazyFA.com, back again for another one of our weekly analysis videos. Today we're going to be looking at NetE Incorporated. If y'all are not familiar with LazyFA, LazyFA is an automated web application that helps you to make better investment decisions by giving you a lot of the stuff that's on financial statements and that you're going to see in SEC filings and things like that. It kind of automates that whole process for you, automates the reading of it, automates trend calculations. And so that's what I'm using today to do this analysis. So this company is NetE Incorporated. And this is the first time that I've really looked at the financials of this company. I've traded this company for quite a long time as a day trader and a short-term swing trader because it's a very volatile stock. It's a very high short interest stock, and it's a very low float stock with only 2.7 million shares in the float. I think it's up to like 3.5 now at this point, but still a very, very low float stock. It's a very volatile stock, and I thought it was a real interesting case this week because they just had some real positive news that they have appointed John Najarian to their board of directors, and he's a very well-known investor and well-known personality on CNBC, and so he's got a very good reputation, or at least a very well-known reputation. So they appointed him to their board of directors, and he's going to be helping guide them in their strategic ventures. Another thing that I think is driving this company and has been driving it for the last several months is the whole cryptocurrency phase, right? Because NetE is a technology solutions provider, right? So they build solutions for point of sale systems, automated payment systems. They sell a couple of different things that go in like restaurants and retail stores to make the payment and transaction process easier for people. And so I've done a little bit of reading on this company. And I think it's an interesting case. So first thing I wanted to look at, and this is something that I always do on all companies, is I just look at the major trends. I look at revenue, I look at net income, I look at their cost growth. You can see that NetE here is running very tight margins, with the scale here on revenue and the scale on cost of revenue is basically the same. And so these are, they're running very tight margins. Their costs are almost as much as their income. Because of that, because of all the extra expenses that they've got, it looks like since 2011 they have yet to actually turn a profit on the bottom line. So that's always a concern when you're dealing with a company that is losing money. But it's also a growth company. It's an early stage type of company. So a lot of companies lose money for the first 5 or 7 years or however long, and then they will flip around and start making money. So just because they're losing money on the bottom line doesn't necessarily mean I'm going to instantly write it off, but something to be aware of. Their revenue, overall, the trend is very, very strong. Looking at the quarterly revenue, one of the things that I always look at is Q over Q growth, and there was a very large spike here which kind of throws off the chart, so I'm going to go ahead and just zoom in so that we can see a little bit better sort of exactly what the trend looks like. And even when we zoom in, we can see that since December of 2015, their growth has been slowing significantly. And that's always a concern for me, especially with an early stage company, because they're going to need cash. They're going to need to do something, right? If this revenue is not growing, they're going to need to do something in order to survive. So somewhat of a concern there. The revenue growth is a little bit weak, but I think that the cryptocurrency thing is really carrying them right now. And just recently, within the last 4 days, this stock has gone from just over $5 to almost 15. It was up at almost 15 today. And so, this thing has really, really taken off. And so it's starting to catch a lot of attention. So I think it's worth investigating it. So let's take a look at the income statement, the balance sheet, and the other financial statements, and just see if there's any red flags on them. So negative net income, negative earnings per share on average, those are probably a given since the company has yet to turn a profit. Negative net margins, also not a surprise. EPS strictly increasing obviously is false because it is negative. However, it is actually with an 80% monotonicity, which basically means that 80% of the time over the available data range, their EPS has been higher than the period before that. So even though it's negative, it might be less negative. It might be becoming less negative, and we can actually look at that. If we look at their earnings per share, which is on the income statement, earnings per basic share. So they are, looks like, I mean, it looks like they're getting close to the point where they might be able to start turning a profit. This diluted, the weighted average shares, I think is, I actually meant to click on earnings per diluted share, but that's another concern of mine, is the dilution, and we'll get to that in just a second. But this company is diluting their stock very heavily. We can see just since 2011, it's gone from under 300,000 shares in the shares outstanding to over 1.8 million. And actually, this is since 2017. This is actually, I believe, a bit out of date. If we look at their most recent 10Q, it was more like 3.5 million. But I'll look at that in just a second. So EPS, even though it's negative, actually does not look too terrible, since the trend is towards positive. Excessive dilution, we just talked about that. They are diluting at a pretty high rate, so this is a big concern, obviously, with a company that is just going to continue to sell stock into the open market and continue to dilute their shareholders. So that's something to be aware of. And then the top to bottom line divergence alert basically just tells us that net income and revenue growth have different signs. We can see this on the chart, right? That the average revenue growth of the last 6 years has been almost 410%, right? So revenues are off the chain, but net income is negative and the growth in net income is negative. So that is a divergence between the top and bottom line numbers. That's always a red flag. Balance sheet. This was another thing, actually, that this bothers me on pretty much any company. If we take current assets and non-current assets off of this distribution, I need to change this, actually, but because these two encompass all of the others, so I need to remove them because it's a little bit deceptive. But this is my concern. This large slice of the pie here, right, is all intangible assets. So this company is banking a lot on intellectual property and just stuff that's difficult to assign a value to. And that's always a concern for me because you never know what that's really going to be worth in the event of a liquidation. So LazyFA will trigger the overweight intangible assets flag if intangible assets make up more than 30% of the total company's total asset base. And that's what's happened here. Intangibles as a percent of total assets is almost 60%. So, if this company gets into a bind and needs to liquidate, it's going to be difficult to assign a value to almost 60% of their assets. So that's something that I always want to be aware of. There's a couple of outliers in cash growth, most likely related to dilution, and we can look at that just by looking at cash over time, so cash and cash equivalents. Yeah, so this is a big spike here, 5.6 million in 2012, and that is most likely going to be related to some sort of a secondary offering or some sort of dilution. And we can actually see, yeah, so from 2011 to 2012, the growth obviously was gigantic at 6,600% year over year. This is because of dilution, and you'll see that on the chart. If we look at weighted average shares, there's a big spike here from 2011 to 2012. They made some large sale of stock during that period, and it's only gotten worse since then. Okay, so dilution, cash is obviously a concern. These two at the bottom, are also a concern for me, mainly because these tell me that the company is potentially running low on cash. And so what this is telling us is that on average, the company's burning $273,000 a month, and they, at the time, which is a little bit outdated, so we need to look up the current cash balance. We can do that on the quarterly chart, but they're, at the time they were burning, $273,000 in cash per month, and they only had $620,000 on the balance sheet. So companies need cash in order to survive. So we obviously want to understand what their current balance sheet looks like by looking at cash and cash equivalents most recently. Looks like they're at about just under $1 million on the balance sheet. And their current burn rate is, as of September 2017, is about $117K per month. So even now, right, as of September of 2017, they really only had about 8 months worth of cash on the balance sheet. So that's something that you want to keep a close eye on with a company like this, is just how much cash they have left and how long they're going to be able to survive before they need to continue raising more capital. On to the cash flow statement. Again, you can see we have a lot of red flags that trigger on this company, mostly because things are negative, right? Operating cash flow is negative, net cash flow is negative, free cash flow is negative. This is all because the company is losing money on the bottom line. So I won't go into a lot of detail on those, just because it's easy enough to combine them together with the other things that we've looked at. And then let's look at cross-statement analysis real quick, and then I want to get into some of the SEC filings that have come out recently for this company. So accounts receivable to sales is high, accounts payable to sales is high, and then there are outliers in the PPE to total assets ratio. This, I think, may be a red flag, maybe a false positive, because I think that this is probably the one that's triggered back in 2011. And yes. So I'm going to ignore this particular flag just because this is an outlier. As we can see, their PPE balance after that 1 year has been fairly stable, which is what it should be. So I'm not going to worry too much about that one. I did check out the Benish M score. I checked out Benford's Law on this. I don't believe there was any major red flags in terms of manipulation of the numbers, at least not at the moment. So we've got an M score of about -3, which is not likely to be a manipulator. And then Benford's Law, their distribution was pretty normal. The only concern really was on the cash flow statement. They had a pretty large divergence of over 12 percentage points, basically 12% fewer ones on the cash flow statement than they should have had. And then same thing with leading digits 3 and 4. Pretty large divergences from the normal distribution. If you're not sure what this stuff is, by the way, there's explanations of it here. There's a link to the paper where this algorithm came from. And there's also past videos where I've explained this in a little bit more detail. So feel free to go back and look at those, and I think it'll make it a little bit clearer to understand. Okay, so last thing I always do with companies like this, and keep in mind, right, this is just a starting point. This is definitely not the only analysis that I do. I've been actually reading about this company for the last couple of days and kind of digging into all the stuff that they've got going on, reading their SEC filings. So there's a lot more research to be done, but this is, I think, a good starting point and a good place to start in terms of where you could focus your research. So I'll always read the latest 10Q or the latest 10 if it's a 10K. And the one major thing that, why are these showing as 2012? That should not be, there should be more recent ones. Let's try BAMSEC. Okay, so here's Q3. I'm not sure why the dates are off on the actual SEC website. Maybe I just looked up the wrong company name or something along those lines. But anyway, we'll just use BAMSEC here. One of the things that really concerned me reading through the 10Q, right, this is the most recent one, was this line right here. The conditions above plus the risk of our ability to secure sufficient financing in order to pay such obligations raise substantial doubt about our ability to continue as a going concern. So basically what that means is this company is teetering on the edge of bankruptcy, and they're getting to the point where they're not going to be able to survive if they're not able to secure sufficient financing in order to continue their operations. So because of that, I've seen a couple of different things come through even before the Nigerian thing. They had amended their shelf registration a couple of times, and this is a agreement between NetElement and I forget the name of the company, selling stockholder, Isusa Holdings, to sell something like $7.5 million worth of stock and warrants that are going to be exercisable within the next 5 years. So you definitely want to give this stuff a thorough reading because there is going to be further dilution on this stock, and you do not want to get stuck in a situation where you're buying a company that has just shot off 300%, and you're buying it $15, and then all of a sudden the investor that bought these warrants starts dumping them into the open market. Also, keep in mind that this company has reverse split at least once in the past. It might be even more than that. I haven't really paid much attention to it in quite a while since I haven't been day trading that much. But if we look at like splithistory.com, we can see they split in 2000. They split in May of 2016, and then again in October of 2017. So 1 for 10, 1 for 10. This was a forward split. These two were reverse splits. So the reverse splits are generally executed because the company is struggling to stay above $1 and staying listed on the NASDAQ stock exchange or whatever exchange they trade on. If there's rules where they have to have a stock price over $1, they're going to reverse split in order to be able to stay on the exchange and continue trading. So keep that in mind when you look at the history of this company. The stock has gone up 300% in the last 4 or 5 days, but it's not uncommon for this company to shoot off 300 or 400% and then fade all the way back into penny stock land again. So that's that for NetElement. I'm pretty interested in this company. I think it's an exciting time for them that they have just appointed John Nigerian to their board. They're talking about doing some stuff with cryptography or with cryptocurrencies, and who knows how serious they are. They've had a couple of problems with the investor that was supposed, the company that was supposed to be helping them develop their crypto solution, and they just kind of pieced out and stole 19,000 shares from them. And so that's kind of up in the air still. There's a couple of open litigation cases that you're probably going to want to look into. Those are also mentioned in the 10Q. So I guess my point is with this one, it looks interesting. Revenue is on a tear. Costs seem to be pretty much under control. Debt is not, too crushing at this point, right? They've only got $4 or $5 million worth of debt. In terms of liabilities, it's going up a little bit because they probably got outstanding warrants and things like that. But, overall revenue's on a tear, costs are under control. EPS is slowly starting to trend towards flipping positive, but this is a company that has had a troubled past, and so I would definitely want to continue to do more research on it. So that's that. Thanks once again for tuning in, and we do this every week. If you have any questions, just drop them in the comment box. And if you want to go ahead and use LazyFA to do this analysis, this ticker will be free for the rest of the week. So all you need to do is just go to the site, create a username and password with your email address, and you'll be able to do everything that you see me doing here. So thanks very much, and I'll see you next week. Peace.